Before you invest your first $100, you must understand this. Small money grows only when you use big strategies. In this video, I will teach you exactly how beginners can turn their first $100 into $1,000 using simple, low-risk investment methods that anybody can start today. I will break down the best beginner investments, the safest ways to grow small amounts fast, and the step-by-step blueprint I personally recommend. Watch this video to the very end, and subscribe to the Diary of an Investor for more powerful money lessons. All right, let's get straight to it. The biggest mistake beginners make is thinking that $100 is too small to invest. They think, what's the point? It won't make me rich. And they're right, it won't make you rich overnight. But that's not the goal. Your first $100 isn't about the money. It's about building the mindset of an investor. It's about creating the discipline, the patience, and the habits that will eventually make you wealthy. Think of it as your financial gym membership. You're not trying to lift the heaviest weights on day one. You're just showing up and building the muscle. So, where should you put that first $100? Forget about risky bets or trying to find the next big thing. As a beginner, your number one priority is to protect your money and learn the ropes. We're going to focus on low-risk, beginner-friendly investments. The goal is to get comfortable with the process, not to gamble. Some of the best options for beginners are ETFs or exchange-traded funds. Think of an ETF as a basket of stocks. Instead of buying one single company, you're buying a small piece of hundreds or even thousands of companies all at once. This automatically diversifies your risk. If one company in the basket does poorly, the others can help balance it out. A great place to start is with an ETF that tracks the S&P 500, which represents the 500 largest companies in the US. It's like betting on the entire US economy to grow over time, which has historically been a very good bet. Another fantastic option is fractional shares. In the past, if you wanted to buy a share of a big company like Amazon or Apple, you might have needed hundreds or even thousands of dollars. But with fractional shares, you can own a small slice of these companies for as little as $5. This means even with just $100, you can build a portfolio of top-tier companies that you know and believe in. You get to be a part owner of the giants without needing giant capital. Now let's talk about the real secret to turning that $100 into $1,000. It's not a magic trick, it's consistency. You're not going to 10x your money in a month. That's a lottery ticket, not an investment plan. The formula is simple. Invest a set amount of money every month. Choose safe assets like the ones we just discussed and hold them for the long term. This strategy is called dollar cost averaging. Here's how it works. Instead of trying to time the market, which is nearly impossible even for professionals, you invest a fixed amount of money on a regular schedule, say $100 every month. When the market is down, your $100 buys more shares. When the market is up, it buys fewer shares. Over time, this averages out your purchase price and significantly reduces your risk. It removes emotion from the equation and turns investing into a simple, repeatable habit. You're not stressing about whether it's a good or bad day to invest. You're just executing your plan. And this leads me to the most powerful force in finance: compounding. Albert Einstein supposedly called it the eighth wonder of the world. Compounding is when your investments earn a return, and then you reinvest those earnings to generate even more returns. It's a snowball effect. Your money starts making money, and then the money your money made starts making its own money. For this to work, you have to do one crucial thing: reinvest everything you earn. If your $100 investment makes $10 in a year, don't take that $10 out. Leave it in. Now you have $110 working for you. It might seem small at first, but over years, this effect becomes incredibly powerful. That's how small acorns grow into mighty oaks. Your initial $100 is just the seed. Your consistent contributions and reinvested earnings are the water and sunlight that make it grow. While we're building good habits, it's just as important to avoid the bad ones. The internet is filled with financial traps designed to take money from beginners. Please stay away from them. This includes day trading, where you buy and sell stocks rapidly within the same day. It's extremely risky, and studies show the vast majority of day traders lose money. Also, be wary of forex signals, meme coins, and any financial advice you see on TikTok promising you'll get rich quick. If someone is promising guaranteed high returns with low risk, they are almost certainly not telling you the whole truth. High-risk crypto pumps and get-rich-quick schemes are designed to profit from your excitement and lack of experience. True wealth is built slowly and deliberately, not overnight. Now, let us talk about something that can give you a return on investment that no stock or ETF can match: investing in yourself. Your ability to earn more money is your greatest asset. While your $100 is growing in the market, use your time to learn a new skill. It could be coding, digital marketing, graphic design, or a trade like plumbing or electrical work. Learning a high-income skill can increase your salary or allow you to start a side hustle. If you can increase your income by just $500 a month, you now have an extra $500 you can funnel into your investments every single month. That's how you pour jet fuel on your financial fire. The return on learning a skill that doubles your earning power is infinite. So, let's put it all together into a simple, actionable roadmap to turn your $100 into $1,000 and beyond. Step 1. Open a brokerage account and invest your first $100 into a low-cost, broad market ETF, like one that tracks the S&P 500. Step 2. Set up an automatic transfer to add more money to your account every single month. It could be $25, $50, or $100. The amount is less important than the consistency. Make it a habit you don't even think about. Step 3. Reinvest all your dividends and profits. Turn on the automatic reinvestment feature in your brokerage account so that compounding can work its magic 24/7. Step 4. Be patient. Commit to holding your investments for at least 12 to 24 months, and ideally, for many years. Don't panic and sell when the market dips. Remember, you're a long-term investor, not a speculator. Step 5. While your money is working for you, you work on yourself. Invest time and energy into learning new skills that can increase your income. Step 6. As your income grows, funnel that extra cash into your investment account. This is the accelerator pedal for your wealth-building journey. Following this blueprint, turning $100 into $1,000 is not a matter of if, but when. It's a realistic goal that sets the foundation for a lifetime of financial success. You'll build discipline, understand the market, and harness the power of compounding. This journey is about transforming your financial habits, and the money will naturally follow. Thanks for watching all the way to the end. If you found this video helpful, please hit that like button and subscribe for more straightforward advice on building wealth. Let me know in the comments what you plan to invest your first $100 in. See you in the next video.